We've got the management of Mindtree. Rostov Ravanan, the CFO of Mindtree, is joining us right now on the show. Mr. Ravanan, pleasure speaking with you and apt, so to speak. What's the concern there? There's a lot of flutter in the investor sentiment about, what is the future of the IT earnings, at least keeping in mind the global turmoil that we are seeing. What's your own sense from an industry perspective?
Sure. Thanks, Davina. I think maybe from a stock market perspective, a little bit of these concerns are probably overplayed at this point of time. Our own conversations with most of our customers indicate that their own businesses are doing reasonably, on a good shape as of now. So at least for the next, I would say, few months, we haven't heard anything that will give any cause for concern. At this point of time, none of our customers have given any indication that they are canceling projects or deferring decisions or anything or the other, like that at this point of time. So I think for the next few months, I don't think any major negative sort of earnings surprises are likely from any of the Indian IT industry. But on a medium-term basis, when customers plan their budgets for 2012, which they should logically start doing somewhere in the October, November, December kind of a time frame, what mindset would they start with those budget exercises? Would they be conservative? Would some of these, global concerns get mitigated by then? That we don't know as yet. So our view is there's probably going to be no major negative impact immediately. If at all there is an impact, it could possibly be some amount of sort of, customer budgets getting tightened for next year.
Right. Mr. Ravanan, you've got a revenue target of $1 billion, which you believe you will achieve by the year 2015. Now, if the global environment remains the way it is for a sustained period, which a lot of people believe it will, would you still stick with that $1 billion number?
Absolutely not. We can't defy gravity, right? Even if there is a worldwide economic slowdown, then our targets will, obviously have to be readjusted on that basis. However, I don't think the time is today to take a call on that. At this point of time, like I said, short term looks okay, medium term looks uncertain. Some of these events that we are talking about are unprecedented kind of events. The global financial system was built on the premise that the US was rated AAA, and now that premise is shaken up. What impact this can have is outside sort of anybody's range of prediction at this point of time. So we'll have to wait and watch.
Sure.
Sorry, and if you could just clarify this for us, Mr. Raghavan, this $1 billion revenue target was put out by you before we saw these events play out, the downgrade of the US and the subsequent events that followed.
Correct. See, the $1 billion target was announced by us, I think maybe in 2008 or 2009 kind of a time frame. At that time, we said it is a 2014 target. Given the previous financial crisis in 2008 and 2009, we pushed that target away by about 4 to 6 quarters. So 2014, we said possibly 2015 or 2016 as the target for the $1 billion revenue. Nothing takes it away from us. As a company, I think we are maintaining a growth rate that is at least 30-40% higher than the rest of the industry. And, going forward as well, that clearly is the ambition. But a milestone like $1 billion in revenue, will obviously be also linked to, global events like this.
Are we very soon, Mr. Ravanan, going to see the end of long-term mega deals and commitments from clients regarding the same?
Again, like I said, too early to predict. As of now, for example, there is no such indication. At least in our IT services business, we are still seeing, large and long-term opportunities in our pipeline. Some of those are progressing on schedule. On that, for example, even as of now, there haven't been any major delays or disappointments there. The engineering services business, even historically, has tended to be shorter term and smaller projects. So there is a difference in the dynamic between our two businesses. But for the IT services business, which has been enjoying a reasonably good run so far, 30% growth last year, 10% sequential growth in Q1 of this year. Similar sort of momentum is continuing as of now. So some of these things, like I said, are new events which are difficult to predict. So we'll have to continuously keep assessing. But I would say at least for the next few months, it's unlikely to have any major negative impact for us.
Right, and Mr. Ravanan, you've said that you expect your margins to improve over the next few quarters as you expect to see pricing improvement. But in the current environment, is that something that you will revisit?
Sure. A large part of our initiatives to increase margins is linked to internal initiatives. Currently, I would say all the internal initiatives themselves led to an almost sort of like a 3.5 to 3.8% benefit in Q1. We overcame the negative impact of wage revisions as well as the negative impact of currency appreciation in Q1 and made margins flat in Q1. So I think the first level of margin improvements, my guess is, we possibly increase margins by at least 2 to 3 percentage points from where we are right now, purely on the basis of internal initiatives. Anything that over and above that would be linked to external events like, customer pricing related benefits or, currency related benefits, is over and above that. But our own internal initiative should at least help us get some amount of margin improvements from where we are.